Welcome in this video. Where will Zbcn coin price go? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. A careful examination of the chart shows that price action has followed a specific pattern in the past and is now entering an important phase of this pattern. In particular, a long-observed narrowing pattern, called a descending wedge in the technical analysis literature, is a common pattern in the markets and is often regarded as a precursor to strong upside breakouts. Such patterns occur especially at the end of falling markets and signal a trend change to the trader. This is a similar situation here. For a certain period of time, the price moved in a tight structure characterized by falling lows and falling highs, and finally broke the upper line of this structure and started an upward movement. This breakout is not only the end of the pattern, but also the beginning of a new uptrend. This is because descending wedge patterns usually indicate that the price can't go any lower and sellers are weakening. Buyers, on the other hand, seize this opportunity and start gaining strength in the market. This is exactly the case here. When the price broke the upper line of the pattern and gained upward momentum, there was strong volume support behind this move, indicating that the breakout could be healthy and permanent. Such breakouts are usually not speculative, but a sign of structural transformation, and indicate that the price may reach higher levels in the medium to long term. Currently, we are seeing a retest of the price after this breakout. This is considered a very healthy development in technical analysis. Because prices don't always move in a straight line, broken resistance levels are often later tested as support. These support tests are also considered buying opportunities. In other words, the price pulls back towards the broken pattern line, gathering strength and preparing the ground for the next upward move. This process actually reveals that the uptrend is based on solid fundamentals and exhibits a healthy technical structure. In addition, such retest processes are also very important for investor psychology, because many investors who miss the first breakout look for an opportunity to enter a position when the price retraces. This leads to increased buying pressure in the retest zone and paves the way for the price to move upwards again. Therefore, this retest is not only natural, but also a positive indicator for bullish continuation. Once the retest is successfully completed, it is highly likely that the price will regain momentum and move towards the target levels of the pattern. At this point, it is worth mentioning the characteristics of the descending wedge pattern. This structure implies a gradually narrowing price action between two falling trend lines. However, this bearish pattern is deceptive because although prices seem to be retreating, it actually shows a process where sellers are getting weaker each time and selling loses momentum. Buyers, on the other hand, gradually make higher lows and squeeze the price to the upside. Eventually, this pressure results in a break of the pattern's upper line and a strong breakout. This is exactly what is happening right now. The price broke this wedge structure to the upside, making it clear that the market perception has changed. The retest process that follows this breakout is crucial not only for technical analysis, but also for understanding the transformation of the market structure. Such transformations provide investors with significant buying opportunities, and those who open positions at these points with the right analysis will have realized their transactions at very advantageous points. An upward volume move following the retest process will further strengthen this scenario and cause the price to target previous highs. Also, after the breakout of descending wedge patterns, the target prices are usually as high as the widest height of the pattern. But we can't decide the analysis only by the pattern. Let's look at other metrics. Stay tuned. Careful examination of the chart shows that the price is approaching an important level that it may encounter as it continues its upward movement. This area is defined as a resistance level in technical analysis, as it is an area where the price has paused and even retreated several times in the past. Such levels are of psychological significance for market participants and are often areas where buyers are hesitant to make a decision and sellers tend to evaluate their positions. The fact that the price is now approaching this resistance point suggests that we are at an important technical threshold. However, this is not a negative sign, but rather a sign of a careful and strategic rise. Since resistance zones are usually areas where the price has made sharp moves in the past, there may naturally be some slowdown as the price approaches these levels. This slowdown may cause profit realizations in the market. However, this doesn't mean that the uptrend is over. On the contrary, at such levels, it is technically considered a very healthy scenario for the price to rest for a while, gather its strength, and then break upwards in a healthier way. This is because in order to break a resistance level, there needs to be enough buying power and volume in the market. Even if the price fails to break through this zone on its first contact, this does not indicate that it is weak, but that it continues to gather strength. The first contacts to resistance levels in the market may not always result in a breakout. However, this doesn't mean that the uptrend is over. On the contrary, the fact that the price even approaches this level is a positive development because it shows that buyers are still strong and willing to push the price higher. If the price reaches the resistance level and there is a short-term sideways movement or a slight retracement, this could be interpreted as a sign that buyers are starting to consolidate. This kind of consolidation usually sets the stage for a strong breakout later on. Also, in case of a strong breakout of resistance levels, these areas may later turn into support. This transformation gives a strong signal to the market that the trend has changed direction. In this context, the fact that the price is currently on an upward momentum and is about to reach an area that has worked as resistance in the past could potentially herald a new bullish wave. If strong volume builds on a breakout to this level, the chances of this breakout becoming permanent increase. Breaching the resistance zone also has a positive effect on investor psychology, as the level that suppressed the price in the past is no longer an obstacle. At this point, traders should keep an eye on how the price reacts to the resistance level. If the price moves sideways with small pullbacks after reaching this area, this could be an important signal that the uptrend will continue. Because this kind of movement shows that the market is still dominated by buyers and the seller's influence is limited. Therefore, the price meeting resistance should not be seen as a negative development, but rather as a positive development that could open the door to a new breakout and a bigger rise. In technical analysis, it is not only the presence of a resistance level that is important, but also the momentum of the price reaching this level and the general perception in the market. If the technical indicators give positive signals and the buying volume continues to increase, the resistance zone is only a temporary pause. Over time, the upward movement can be expected to accelerate further once this level is breached. In this context, each contact with the resistance level demonstrates the market's interest in that level and its willingness to move the price higher. A careful study of the RSI indicator reveals that in the past, this indicator moved within a specific downtrend structure. This bearish pattern reflected a period of investor indecision, as well as a loss of momentum in the market. The formation of such a bearish curve on the RSI is often considered a sign of pressure and compression from a technical perspective. However, the fact that this trend has been broken by recent price action is a very positive and noteworthy development. When the RSI breaks its downtrend, it means that an important structure in technical analysis is broken. This is because when an indicator that measures momentum, such as the RSI, breaks a downtrend to the upside, it indicates that traders are now buying more and starting to regain confidence in the market. This breakout is often considered a leading signal for price movements. This is because trend breaks in the RSI can be a harbinger of possible uptrends on the price chart. In this context, when the RSI breaks the falling trend structure and makes an upward move, it raises hopes for the direction of the market. After the trend break, the RSI retracing back towards this broken trend, in other words, retesting in technical terms, is a very healthy and structural behavior. Because in technical analysis, retest movements after a breakout allow the new direction to gain strength. RSI trends are important. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.